All right. Good evening, friends. Today, we are going to be talking about a really interesting subject. I think it's something that's really important for those of us who are focused on areas relating to inflation and the CPI and trying to understand like what the FOMC members, what they're looking at when it comes to specifically the area of shelter and inflation. And the reality is of the many, many different aspects of inflation. Probably housing and shelter are the stickiest. They have the longest lag time. And so oftentimes, it can feel like inflation isn't rolling over, but actually the data is showing, if you look at the more granular details, that actually things are changing and shifting. And so we have a guest today, Jason Hyman from the office of Jason T. Hyman. And he is going to be talking about, real estate and urban planning and how that is impacted by things, whether it's mortgage rates or just banking in general, and just issues of accessibility for young families and those in the lower income bracket, and maybe some of the unique aspects of how these higher mortgage rates are impacting them and affecting them. So I am just going to bring our friend on. Hi, Jason. So I'm going to let you
Hi.
introduce yourself and what you do. You are a very well-rounded broker, and you've had a lot of experience from the banking side, real estate, urban planning. And so, and your tagline is not just an agent. Am I correct?
Not just an agent, so it kind of sums up exactly what you just said. It's how we like to practice. Uh, to your point, so my name is Jason Hyman. I am an urban planner and licensed real estate broker in the state of Texas. My background, for the most part, has been in public and private finance. I spent some time working for the City of Houston Housing and Community Development Department, where I was responsible for managing the public funds that created housing units, whether it be apartments, new or rehab, as well as single family homes, new or rehab. We even did things like parks and schools and stuff like that as well. And then spent some time in Bank of America, in their middle market group. I was actually in the oil and gas field services as bulk of my portfolio. But again, they're just helping make decisions around money. Have been licensed pretty much that whole time that I was working there. Also going to school at Texas Southern for urban planning. And we talked a little earlier about urban planning and environmental policy. That was the program there. So, but during that time being licensed, all that time to eventually leave the bank, kind of wander around a little bit before I was like, you know what? Nobody's really practicing comprehensively. And so for me, that meant kind of thinking beyond the transaction because, naturally being a broker or a real estate agent, your job is to help extract value. We don't really think about who's putting the value in the neighborhoods or how do we sustain or keep value in neighborhoods. And that was more of my interest. Knowing that if you can do that, the transaction will always be there, right? It'll be there for the next 10 years, 20 years, 30 years, and so on and so forth, right? And so that's how we practice. That's how I train our agents. That's kind of the core philosophy in what we do. And so hence we are not just agents.
Well, knowing you personally, I can say that it's true. You really have a very personable style in how you approach your work and working with people and really taking them on a journey of what it is that they're trying to accomplish in kind of the area of generational wealth. Um, so one of the things though is that I think that oftentimes people kind of put real estate and urban planning as like one kind of lump concept. And I thought it would be good, just because that is your background, if maybe you
Mhm.
could really help our audience understand like what is the unique difference between those two. And because of the
Okay.
fact that they're both unique, how those individually might actually affect things like inflation or be affected by inflation.
Okay. Okay. So what's interesting is that most times, well, it depends on who I talk to. I get kind of a mixed opinion or mixed perspective. Most time people think that those are two competing forces, right? That urban planning and real estate brokerage or real estate, agency is competing forces. Most time people think of urban planning, they don't really know what it is. So they just kind of attribute it to like community building, so to speak. And that's part of it. That's a piece of it. But when we really break things down, urban planning is the study of city development, right? It is how our cities have built over the years and why we have certain policies and different standards and things like that in place. Um, it's what I like to say is kind of the overarching umbrella in things, right? And there's a lot of other stuff that falls under it, and real estate agency or brokerage, investing, things like that fall within it. And so if you think of it like that, urban planning, or most time urban planners either plan from one or two lenses, either technical or tactical, right? Technical meaning they may work for the city or the government or in some kind of way. So at the end of the day, they make the rules, right? They make all the rules that we have to follow when the time comes to how we develop, how tall, how where the sidewalks have to go, all of these things, so we're safe and have a high level or high quality of life, right?
That's actually a lot of power that you have
It's a
in
lot. It's
this
a lot.
industry. I did not.
Now, yeah, and so on the flip side, you have planners like myself. I'm more tactical, right? I'm not in a city government. I'm more private market. I'm more tactical, meaning I'm out utilizing the policies and things that are in place and helping people connect to them and really leverage them, so that the neighborhoods that me and my agents sell in are high quality. That makes sense, right? That we have sidewalks, that we have great schools, that we have all these things that actually make a neighborhood a neighborhood. Um, and so long as we do that well as an organization, then us as agents, we always have transactions to take care of. We always have investors that want to, invest in these areas and make a return. And so that's the relationship that they have together that most people probably find is a disconnect.
So what are some of the unique aspects of inflation that are might be affecting um, both like real estate, but also really with the urban planning? Because that's actually very interesting what you're sharing about. And I'm just wondering how inflation is affecting that area.
So so when you think about inflation, most people just think, right, rising prices, right? At the end of the day, that's what it amounts to, right? Higher prices, higher cost of living, and things like that. So when you think about it, in terms of the real estate itself, there's a lot of things that are happening around like affordability, right? There's a lot less people that are able to afford a home, actually buying a home, the quote unquote American dream or building wealth, right? Well, that's an issue. That's a huge issue, because one, most cities get their revenue from a tax base, and so you may be looking at maybe a declining or shrinking tax base. You may be looking at more of a tax base that is investors as opposed to homeowners who have a little bit different vested interests in an area, right? Um, so when you take all of those kind of data points, for instance, that start to happen on the ground, and you have planners that are able to look at it and say, where are the trends going? That means something has to happen differently with the policies. And so you take things like here in Houston, um, what's happening here, and really across the country, in a lot of cities, we're trying to figure out how to become more dense, how to re-envision our urban cores, right? We want to cut down transportation. Why? Because that's a cost of living, right? If I can cut that out for someone, maybe they can afford a home or more home. You're seeing smaller homes being built. right? Out in the burbs, we build McMansions, but in the city, you're starting to see a smaller footprint, right? We have less kids, things like that. So the development guidelines have to change to support that. So the developers and investors can actually build in that way. You're starting to see uh, land prices go up. So do I really need a huge backyard? That can be cut in half and be a whole nother house. But do the development policies and guidelines support that? And a lot of times, no, it doesn't. And so you're seeing a lot of cities right now that are changing their policies to allow things like accessory dwelling units or ADUs. Or most people look at them like mother-in-law suites. You see cities right now changing their development guidelines to support more quadplexes, right? We can build duplexes, but we can't really build fourplexes, right? On a piece of land in certain states and certain cities because of like parking minimums. Well, if I'm reducing transportation, I'm probably reducing the need for cars, right? So all that has to come into play. And if I'm going to take cars out, if I'm a city, it also means I have to do what is I have to invest in more public infrastructure in transportation, more bus lines, more rail lines, more, making Uber and things like that easier to operate. So all those things start to come into play, and it's kind of a perfect storm because um, one bad policy can lead to, turmoil for a lot of people. But if we get it right, if we take our time and kind of pull things together and get it right, it won't necessarily make prices just drop drastically, but we should have more options in the market. We won't just have, high dollar property in the market, right? So we'll have a little bit more variety for people to pick from and things like that. Um, in us helping buyers, sometimes I've heard numerous times, well, Jason, I really don't want this townhome, right? I really don't want this townhome. That's just all that's there. And I don't want to miss my
Mhm.
opportunity to buy something, right? So people just kind of settling in a sense, but they really would like, different types of options. And today's buyer really is an investor. Even if you're a homeowner, today's buyer is very different from yesterday's buyer. We really want to be more so investors. So we want those duplexes, we want those quads,
Right.
we want to
Mhm.
live in, we want a house hack and different things like that and build wealth.
Mhm.
So
For
that
those
urban,
who previously bought in these last 2 years where prices were just
Mhm.
soaring. And now if urban planning rules come in place that actually make the accessibility of housing more efficient or more effective, then what does that mean for people who bought during the last 2 years? Does it, yeah, how does that impact their investment?
it,
Maybe
it, it,
they may have overlooked or not considered because they didn't expect there to be such a significant changing policy in inflation and rates and so forth.
I don't think it affects them at all, right? On one hand, they've got a really great interest rate, right? They're in the twos and threes, so like they're winning anyway, right? Most of them are probably paying the same note, so to speak, as folks that are buying right now. Now, the value of their property, they may be like, wow, my value of my property just declined somewhat. But if it's your home or if it's your long-term investment property that's in your portfolio, kind of like who cares, right? You you're not worried about that right now. It's kind of like buying, a long-term like a dividend stock. I'm not looking to get rid of it anytime soon. And historically, prices have always done what? Whether it be stock, real estate has always increased. So I don't think there's anything to worry about. It's the folks that are trying to hop in and hop out, right?
Right. The flippers.
Mm-hmm.
Okay.
Yeah.
That makes
And
sense.
so even with them, it just means that they have to be a little bit more. It's not a niche that's just for anyone anymore. You gotta know what you're doing now, right? You
Yeah.
gotta know how to really read your numbers and make good deals.
Yeah. Um, so one of the other things that you mentioned in a previous conversation that we had when you were talking about some other, you were sharing about some different projects that you were working on. You were talking about oftentimes when we talk about inflation, we're so focused on the data and the current prices and the prices of those going on sale, but we're not talking enough about the squeeze on supply. And
Mhm.
it's funny because I was asking another gentleman who is like really focused on inflation, and I was like, can you explain this issue of supply and demand? And he was like, you should ask somebody that is really what they do, because it is actually a much more important factor in what's happening with housing and shelter inflation. But there are few experts in the topic, and so you don't get good data. So I was like, okay, I'm going to be interviewing Jason. So this is the right question for him.
No, I mean, so I'll try to touch it as best as possible. But I think to start, you have to understand that, those interest rates or the changes in interest rates is a direct or more of a, not direct, an inverse relationship to home prices and what's going on there, right? Interest rates go up, prices typically kind of come down somewhat and vice versa, right? So when we had very, very low interest rates, home prices were going up. And now you see the opposite happening. Well, that's always going to be. But something else that's happening alongside it right now that's kind of a phenomenon is we don't have new inventory. Like, so if we look at data, it'll show an increase in housing inventory. But that part is because we don't have as many homes selling. Does that make sense? Right. Okay. So if we don't have as many homes selling, then like, yeah, we have more inventory to buy, but there aren't new construction starts happening at the rate we need them to happen. Right. So essentially, as a whole, there's not as many housing units available. And so it becomes a supply and demand kind of problem, right? I don't have enough housing units for the people that need houses. And so prices tend to either remain sticky or end up increasing, right? And
From
so
your
you see
urban planning side, do you see that there is effective policy that's trying to change this ratio? So like, is there some kind of policy that's being rolled out that would support the like increased development of new builds? Because yeah, like you said, people talk a lot about homes that aren't moving because the prices are ridiculous. People have kept them at 2021, 2022 prices, and you know, housing prices have dropped. So if those numbers don't reflect it, nobody's going to go in for 5-6% mortgage on a house that's priced from the rates of a year or two ago. But do you
it,
see policy coming in that's trying to address that, or is that
I do.
insufficient?
I do. I mean, so on one hand, let me say this. There are some things that's happening, and there's something that I feel like isn't happening that we probably should be doing. So first, you do see some different public like subsidy type of tools that are in the market. They've been around for a very long time, but we're starting to use them a lot more now. So you have things like land banks are becoming way more popular. So people, governments and quasi-public agencies are creating land banks to bank land that could be sold at an affordable rate, right? To builders. They have kind of passed the savings along. You have community land trust, which is what we call like a shared equity model, meaning the land trust kind of owns the land, but you own the house, right? You share some of that equity. The price is kept at a lower rate. And then you have cities like Houston and other places, like I was saying earlier, they're starting to retool their development policies and address like construction code to say, hey guys, you can build more units on one lot. You can build more dense, so hopefully we'll get more units that way. Okay. But on the flip side, you got two things happening. One, the banks don't always line up to that, right? I was saying earlier, they kind of wait till everything is settled and done and safe before they jump in and actually create products for you to actually use. So, for example, I'll say like 3 or 4 years ago, I was interviewing different banks trying to find um, banks that had like construction products, right? So you can buy and build your own home. Well, nobody was offering that. Even though I'm saying, hey guys, this is coming, this is coming, this is coming. They're like, we're good right now. We're making money. Okay. But now all of them have construction products, right? So they're kind of behind the curve. But even those construction products, I can't build a duplex with them. It has to be just a one family. That doesn't line up with what the city's saying they want. And so that's one thing that has to really be addressed to banks. The other
Why
thing
is
I
there
think,
such a disconnect between policy and then banking product development? It seems like whoever
mhm,
is managing those portfolios of lending would have their own expertise in things like urban planning and be connected with the city, so they
man,
are kind of on the forefront of supporting urban planning and urban development.
you would think banks, because most of them are like large institutions, they're very sophisticated, you know, publicly traded companies. You would think that they're more proactive, ahead of the curve. You would be surprised at how reactive lending institutions are. So long as they're making money and things are good, they're like not going to change much, right? Most times they'll change when there's a real strong, safe demand for it, or regulators come in and say, you guys need more exposure to this, just point blank period. So there's a
That's
lag there.
amazing and kind of disappointing because banks have so much power in this conversation and
They
they
do.
run you through such a massive amount of like data pooling before they will lend to you that that it's just it's phenomenal that then they're not up to date with what's happening in their local communities. Is it the same for the larger banks versus like a credit union, or would a
No,
more localized regional bank have better policies?
I'm gonna say like on a high level, a regional or local bank is probably going to be a little more flexible, but they even same thing, right? They're really not a part of the discussion. And I think that's where, you take us, for instance, we try to bring everybody in the room together, right? We can't talk just to the developers, right? Everybody has the policymakers, the developers, the bankers, everybody has to know how things are lining up and kind of retool themselves. And then even within that, I think we do a poor job culturally, right, in the US, culturally, and kind of educating and marketing the facts. So earlier you said, well, I want to buy at 5 and 6% on this home that's a little bit higher price. Well, number one, prices are always going to go up. There's nothing we can do about that, right? But that interest rate that's 5, 6, even 7% now, that actually has always been like the regular interest rate. That's
That is
it's not
that is actually so true. I was
so
one of our friends and they were like, when we bought our house, their older family, they said mortgage rates were 20% here in Germany. And I was like, 20%? My goodness. So basically the first 15 years, all you're paying is interest, really. I mean,
interest.
and we're complaining about the difference between 2 and 3 and 5 and 6%. So yeah,
It's
I'm
it's
with you.
probably only in the last maybe 10 years that interest rates have been below 5. Historically, they have been like between 5 and maybe 9%. That's been pretty typical. So you end up putting, if it's your home, you put more down if you can. Um, or you like today you buy smaller, right? The days of two, we don't, why do you need 3,000 square feet, 2,500 square feet for what? Why do you need 5 bedrooms?
I don't even want to clean that much space.
Right.
Forget about living in it.
Mhm.
Yeah, no, it's like a
So
full-time job when you have such a large house.
it is. So I mean, it's just things are changing. We have, baby boomers aging. They want smaller units, right? They need smaller, or they need, senior care, senior living. And then your millennials, your large purchasers. The millennials, still some of your Gen Xers and things like that. We don't have 5, 6, 7 kids. A lot of times we have one, two, maybe three now, maybe three nowadays. You have some millennials like I have, like my younger brother and the cousins his generation. They're like, we're not having kids. So there's a lot we have to retool kind of culturally, um, as well. So again, perfect storm
Yeah, and
also has to
that's
catch up.
and it's really for the long-term demographics of the
Mhm.
country. If you cannot encourage young families to have children, it's I mean, it has really long-term systemic effects in the wider economy. Just
Yeah,
looking at countries like Russia and China, where they're already having to retool policies to deal with the reality that actually they have, in even 100 years from now, they're going to have a significant population dearth, and how anybody's going to be around to take care of the older people and the older generation is a significant issue for them. So you think about these issues that like housing, where it seems like it might not actually be that systemic and have such wide ripple effects through society, but that's not true, because if young families are discouraged from having kids, then things like social security and even just business development and business expansion, you just have fewer people coming into the labor market, which is a
you're right.
a disaster. So
You're right. You're right. You're right. But again, like I say, that's all those things. Um, Housing is such a driver, um, that if we don't begin to align in ways to create options for them and others to live and have a decent quality of life, those are the types of decisions that they're going to make, right? So, when you talk about, our office or me kind of trying to kind of practice a little more comprehensively from a real estate aspect, it's because I want to be able to sell a house uh 30 years from now if I want to, right? But if things like you're saying really happen, that won't be, right? I'll be able to sell, there'll be moments where I can sell and do things, but 10 years from now, we may look up and things have just really dried up, right? And it's hard. It'll be a lot more competitive. So a lot
wow, I
of
never actually thought about it from that angle, that actually the lack of current housing slowly makes the entire market more competitive for people that are in real estate.
Mhm,
There isn't houses for them to sell. I'm surprised I hadn't thought about that, because a lot of um like on social media, a lot of people that are, we're trying to sell homes in areas like Dallas, and especially Dallas. It was like they were telling people you're going to have to go out to like a suburb almost
mhm.
45 minutes away in order to find anything, and because there's just nothing in Dallas to buy. And it's, yeah, I mean, it makes sense now what you're saying. Are there other aspects of like housing and urban development that impact, or urban planning, I should say, that impact inflation in the wider market that maybe people don't they don't consider, or they don't take seriously enough, or they just don't know about because people aren't talking about it?
Um, I think a couple of things that we look at, and there's been a lot of discussion as of late, um, is I'd say like one, like the Airbnb market. That's one because those are housing units, right? Somebody couldn't buy that house. Um, and because I can make so much more money doing short-term rental on a house or a multi-unit, um, and it not be my actual primary residence, that means I could pay a lot more, right? If I'm paying a lot more, that's really kind of skewing the market, right? When all I money me as a home buyer, I can afford 250, but you come in and you're like, I'll pay 280 because you know you're running it as a business. Well, no, it's okay if you want to run it as a business, but I feel like if you're gonna run it as a business, the city and the place where you are, they need to treat you like a business. They need to tax you like one, right? They need to regulate you like one, and not just kind of let that happen. And that'll help balance some things out. And then we've had a huge here in Houston, probably the last 5 years. There's a big drive around like wholesaling. And so there's no policy against wholesaling. If people aren't familiar with wholesaling, it's being able to get a property under contract at a deep discount and kind of take that contract, I got for 50,000 and just sell the contract to someone for 65,000. And I take the difference. Well, I didn't sell it to an end buyer, I sold it to an investor. And so what happens sometimes is the wholesaler sells it to somebody and then they sell it to somebody and they sell it. Before you know it, the price is jacked up before it even got to an end buyer. That we're in we're in that same pickle, so to speak, right? We've drove the price up. So somebody made some money, right? Which is fine. Somebody made some money, but there was none left on the table for person at the end. And we end up, just having high prices, so to speak. So those are other drivers that we see in the market that affect what we're doing on the ground.
That's actually very interesting because I was listening to an interview where the lady was talking about, she called it the Airbnb bust, that now a lot of people that went into the market and were willing to pay these higher prices, now because of inflation, there's so much pressure that
Mhm.
people aren't traveling as much. People aren't, if they're going to take an Airbnb, they'll pick something that's maybe a little bit smaller or a little bit, wasn't what the person had in their mind. It wasn't that 2020 luxury lifestyle of social media that that you saw around. And so people were getting phenomenal income, but now that's actually starting to dry up. Do you agree with that statement? Do you see that as well? Or do
I
you still
see I
Airbnbs?
see it shifting. I see it shifting in two ways. The smart guys, they're moving to more multi-unit where it's a little bit more sustainable. And then some cities are actually doing what I'm saying. They're permitting these guys, right? They're regulating them a little bit. And so you are seeing some people kind of get out. But there's still some aftermath that has to be dealt with because, like I said, they may have bought at a higher price thinking, hey, I'll be able to afford it. Well, somebody still has to pay that higher price, even though they might, purchase their home. Um, so there's that dynamic that's still there, but um, I don't see it going away. I think we're figuring out how to make it part of the housing kind of ecosystem in a sense. It was rampant at first. It's everybody everybody
Yeah.
was doing it. So
It's
yeah.
funny because my one of my business partner and I, we actually bought a derelict home in London and renovated it. I mean, this house was um, just a total catastrophe. It had to basically be rebuilt. I mean, besides like the actual structure, but everything had to be gutted and then renovated. And at the end, so in the beginning, we were house hacking, and then we moved towards this Airbnb structure. The thing that we did was that we actually connected with a local hospital that had a lot of traveling
Okay.
nurses. And so
Okay.
um like a lot of our stayers were actually people that were working as carers for elderly people or working in the local hospitals like traveling nurses. But
Okay.
but then after we did this, we started to see so many people trying to do the same thing, but actually taking homes and then normal homes and then renovating them into really what looks like hotel rooms. And
Mhm.
it seemed like this phenomenon that it's like, this isn't how families live. Families do not live in a one bedroom or studio apartment with children. And so this is really nice if you're maybe a student or you're working in a different area than maybe where your home base is. So you like to have that, something closer to your work situation. But as a like family establishment, it felt a bit strange because the way that we created our Airbnb, we actually kept it as a normal home. So
Okay.
there are those normal shared spaces of like the living room and the dining room, kitchen. So it didn't have the feel that you're actually staying at a hotel. But I think that if a lot of people are doing that, where they're actually making those renovations so that a 2 bedroom house is now like 2 studio apartments for Airbnb, that's not sustainable for families. I mean,
And,
even for a
and,
couple for a while, that's not
and I
interesting.
mean, and one at some point there's a tipping point, right, where there's an oversaturation, just period. And just the best ones are gonna do well, and everybody else will fall off. Um, so I think like things like that, Airbnb, even rent, rent right now here is really strong because of course, interest rates, prices. People are like, well, I'll just rent, I'll rent for another year or two. So you're seeing that, but as rents become stronger, you get people like, well, I'm gonna invest, I'm gonna go buy some more for my investment portfolio. So like I think all these things are good. They're natural, a very organic, cycle in the market, real estate cycle in the market. But I also believe that while there's an abundance of information that make it possible for people to act now, it also is a abundance of misinformation. And so, just history has shown, people make either really smart decisions or really
Mhm.
dumb ones. So,
Yep.
um, and the policy and things like that is there to help curb it as best as possible, but still keep a healthy market.
Now, on a completely different topic, and I don't know if this is something that you want to talk about, but on when it comes to commercial real estate, the fact that
Okay.
there are so many people now that have gone to this hybrid working system or just working from home, um, a lot of commercial real estate is just absolutely unused. And is there any policy that is trying to um, do something with those commercial real estate
Yeah.
pieces that are massive but are relatively unused in comparison to 2018 or 2019?
Yeah. So no, you definitely, you're hit it right on the head. I think it's a really good thing to touch on it that the commercial landscape is changing dramatically. We're all used to commercial kind of really meaning, Walmart, Target, huge big box. But what, COVID really showed us is that we don't need footprints like that to still make money. Not just people, a smaller work from home, but like I just need a showroom, right? And COVID created a lot of entrepreneurs too, right? And they don't need 30,000 square feet. They need 500. And so you see commercial changing in where uh, smaller footprints and shared models are becoming more popular, kind of more of the trend and where we're going. So those huge spaces, what we're seeing right now, people are buying schools and refitting them. They're buying office buildings and refitting them to make them housing. So there's opportunity there. There's a silver lining. There's opportunity there. But depending on where you are, when you talk about policy, sometimes the policy says, hey, you have to change certain things about that structure and it becomes cost prohibitive, right? Because those big commercial structures were built differently. They weren't built for houses,
Right.
so to speak, for people to live in. So they had different development standards. So um, there hasn't been a lot of change there yet because it's so new. It's really trying to figure out what to do with these spaces. But you kind of we're seeing it on the horizon. We're seeing it on the horizon. There's definitely across the country some of that happening.
So from your point of view, do you see shelter inflation continuing to drop? Do you think that that's, even though that has been a stickier aspect of inflation, that that aspect of inflation is going to go down? Or do you think that we're going to continue to see a lag in housing and shelter, and so that part of the CPI is going to remain inflated?
Yeah, I think so long as what I think is like from my perspective, I don't know if I'm right, right? No one has a crystal ball.
Yeah.
But from my perspective, I think we're gonna see things kind of become stagnant for a little while. Um, the reason being is when we go back to supply and demand, until we put more units on the ground, like that's the only way to create a healthy market, right? At this point, until we see more units on the ground, nothing's really going to change, right? We
Yeah,
can
that makes sense.
you can tweak the interest rates all you want. Nothing's really gonna change.
Yeah,
So,
that that makes sense. Because yeah, if there's nothing to buy, then prices will remain too high, even if the interest rates come down, and that will keep this aspect of inflation higher for longer. Um,
mhm,
so yeah, I mean, these data points, you don't know them until they actually come out, because there's always these technical smoothing mechanisms they
mhm,
use, seasonality measures in order. And so, when you actually see the final CPI data come out, there's always aspects that you feel, wait a minute, why was that so low or why was that so high? But I think I agree with you that generally, I think that there are a lot of fundamental issues in housing that across the United States that will continue to keep those data points higher. And we'll see if the Fed will continue to raise rates in order to depress prices, or now because of this banking situation, if they will be forced to pivot sooner than they had initially anticipated.
yeah. Even with that, like when you say depressed prices, like how much can they be depressed? Do you even want to do that, right? Do you even want to depress prices continually like that? So my thinking, my rationale, if I'm in the Fed and I'm doing my monetary policy, is that I'm going to try to hold things as steady as I can for as long as I can to give the cities and the builders time to catch up.
That makes a lot of sense. And that's actually something that in the Trade Speakeasy Telegram group, and I think maybe on a live I discussed, the issue that for a long time people were frustrated that Powell stayed in the transitory conversation for so long. And I was under the impression that he may have been, in that sense, dragging his feet because he didn't have power from inside the FOMC to push
Mhm,
rate hikes, but also because he wanted those smaller businesses to be able to have a chance to really roll out debts while the interest rates were still low, so that
mhm.
once they were fighting inflation and now they have higher inflation and higher rates, that you know they're um, that they're not competing against all of those factors, that they had the time to roll out debt into a lower interest environment. I don't know that that's absolutely correct, but I think that it makes sense, and it makes similar sense in the housing, um,
Or
in
or
this
think of
section of housing.
or think about it like this, or another angle. Um, Rates were low, when late rates were low, home prices, were increased. So not only the property owners were they able to sell their property and make, you know, really big capital gains, so were builders. Builders were able to develop and make, really big capital gains. So the hope is right, they stacked a lot of that capital. And now you have to make some smart decisions and kind of investing it back into the market, right? Our financial policy here rewards those who spend money, right? Not just make the money. So now we're in that phase. Okay, guys, you got a chance to hoard a lot of money over the past few years. Now I need you to kind of stimulate things, right? And so we'll see what happens there. Some builders are kind of like, I made my money, you know, I'm out.
Yeah,
Some
I'm
property
done with
owners,
this.
they're sitting at home like, but for the most part, as a whole, what's going to happen to get things stimulated again, right? To incentivize. You can't hold on to cash. If you're a business in the U.S., you can't hold on to cash, right? You're going to get taxed,
Right.
right? So you got to put it out on the street. So we'll see what happens.
Um, so before our time comes to an end, is there anything that you wanted to focus on or share about that maybe I didn't ask about?
Um, no, I think we touched pretty much most of it. I mean, I think as of late, especially in our office and the things that we're doing locally, I really, really encourage people to become better local advocates. And I don't mean you have to become some leader or advocate or whatever the case is in rally. What I mean is that you are investing in your own backyards, right? That you are kind of you're putting in your community what it is you would like to see, right?
Mhm.
Otherwise, we keep running into these problems and these cycles. So we're starting to see a lot of cities kind of go back to the old days of like main streets, the mom and pop stores. That's really what we have to get back to. So we're not subject to these huge swings as much anymore, right? We have
Mhm.
kind of a sustainable economy. These like little small ecosystems everywhere in a
Mhm.
sense, right? Especially in your Black and brown communities have been disinvested, vulnerable populations like that are being gentrified. How do we get back into those neighborhoods instead of like just extracting wealth and running,
Yeah.
right? Running to the burbs, so to speak.
Mhm.
So I really like to encourage folks to like, um, you know, become vested somewhere. Essentially, I
Yeah,
think
I've
that's it.
I've been, I mean, just being that I'm also from Houston, and I was, recently looking at the area that was down by my church, down by Main Street, and just the amount of like how that whole area has changed and developed. But then you go out to like the third ward, and then the the rate of change is much slower. So I saw it with my own, in that sense, I
Yeah,
saw it with my own eyes. So I understand what you're talking about. And it is really important for for people to invest back into their own communities in order to really help increase that standard of
yeah,
living, not just for themselves, but also for their community members, because that's where their kids are all going to school together. They'll maybe work together one day. That's how communities grow over generations. So I
absolutely.
really agree with your sentiment.
Absolutely. Yeah. If you become vested somewhere, it all works out. I shared a clip, and you mentioned Third Ward. I shared a clip of a developer in Third Ward. They were building homes. Several developers have built homes along the commercial corridor. And this is an area that, the studies show there are no jobs, but we're building homes along the commercial corridor. And these are all parcels that got sold to someone from out of state or wherever the case is, or not from the area. So they have no vested interest in, like, they don't care, right? I'm going to make my money wherever I put this house. But there's plenty of other land where they could have put those homes. So where do the businesses go, right? For people to work and
That's
things like that,
disappointing.
right? So you got to keep in mind those kind of things. You're going to get what you get if you're not in the game.
Well, I really want to thank you so much for your time and sharing your expertise with us. The whole issue of inflation and just the pace at which policy, monetary policy, fiscal policy is changing, what's happening in the housing market. What we have been through in even the last year feels like 5 years worth of just consistent data changes. And I laugh with the members of the trade speakeasy that, did you ever think there would be a time in your life where you would know what PPI and CPI and what core inflation versus energy minus shelter,
No,
like that you actually knew and understood, and you were worried about those things, that like that information is like in the back of your mind when you go to sleep thinking, oh, if the inflation rate continues to go up in energy or in housing or food, that you're losing sleep about those things. But I don't think anybody anticipated that we would be at such a situation where this kind of economic data would just be so important to the average person that it would literally be a dinner conversation that you could have. So I really thank you for like coming on, breaking down, the issue of banking and mortgage rates and inflation, specifically relating to real estate and urban planning. And I hope that as the time goes on and we continue to see changes, that you will consider joining us again to give us some updates on what is
Absolutely.
the housing market.
Yeah, absolutely, absolutely. I definitely enjoy being a part of the discussion. So anytime I can, I'm more than willing. I like to tell people kind of to what you're saying right now. We don't always realize that, like, really truly, like, we're living history, right? That, when we were little, like you're saying, growing up, you read about recessions and the Great Depressions and all that kind of stuff, but you never thought there would be, famines and COVIDs and all that kind of stuff in your time. So like this is our history.
Mhm.
So, I definitely enjoy being a part of that discussion and like really, wherever I can share.
Can you share with our audience where they can find you? I know you're on Instagram and
Yeah, yeah.
your handles.
Yeah, so I'm everywhere. I think it's probably best bet if you go to notjustanagent.com, our website, all of our different social media platforms are there. We're on like LinkedIn, Instagram, Facebook, and then you can always hit me at Jason T. Hyman, and I'm pretty much on all platforms. I'm fairly active.
Perfect. And for those that are catching this, that are new to the channel, please like, subscribe, comment. Let us know what you think about the issues relating to housing, inflation, and let us know if you have any other questions, because Jason can always come back and answer whatever questions we might have missed this evening. But yeah, I just want to wish you guys all a wonderful Tuesday evening. And again, Jason, thank you so much for joining us.
Thank you. Thank you.
All right.